Well, look, the Bears haven't had a huge amount of luck recently. They certainly wrestled back a little bit of control last night. We'll show that in some of the price moves there. But certainly people focused on the economic data in the US. I think some people looking at the big misses we've been seeing, things like industrial production numbers in terms of retail sales numbers, NHAB home index, for example, and New York Fed manufacturing was pretty awful as well. If you marry that with the loan provisions that have been seen from various banks like Bank of America, JP Morgan, Goldman Sachs, Citigroup, people are talking about a solvency issue that's potentially unfolding in these markets. Let's have a look at that data point in an interesting way. Look at the Citigroup Economic Surprise Index for the US, absolutely cratering. Now that just shows that the data is not only deteriorating, but it's also missing expectations by some margin as well. We've got our eye firmly on what's happening in this European banking sector index, and that's breaking through this rising trend. So that's a bit of a concern given all the stimulus we've been seeing. And have a look at these European markets. The MIB down 4.8%, the DAX down 3.9%. We're seeing some decent flow playing through in the MIB and also the FTSE as well, certainly from the short side. You can have a look at the S&P closing down 2.2%. The Russell, the small caps, certainly underperforming there, down 4.3%. Bit of outperformance again from the NASDAQ. But it's an interesting one. You know, you go into the oil markets and you can see Brent prices down 5.4%. WTI price is fairly firm, being long WTI, short Brent in the June contracts. I think it looks quite an interesting trade. Have a look at what we've been seeing in the bond market because that data really resonating. We haven't seen much selling. The Fed stopped that from really happening. Vols have picked up a little bit. You've got the VIX trading 40% at the moment, 3 vols in the session. And if we look at the FX markets, well, the dollar's rallied 0.7%, but it's masked what we've been seeing is high beta currencies under pressure there. So it's been a real good day of risk aversion playing through. Long treasuries, short stocks, and certainly some interesting charts there. That data really being pushed into focus there. SPI futures down 2.2%. We're going to be watching the Aussie employment numbers there. There may be a little bit of sensitivity to the Australian dollar in the back of that, although I think they're looking more closely at what's happening in S&P futures. The market's looking for 30,000 job losses. One suspect there's some modest downside risk there. A little bit of selling playing through in Nikkei futures. You can see them down 1.2%. Hang Seng down 16 basis points, and then FTSE A50 futures down 0.4% as well. So